To be joined by Peter Schiff, who's the President and CEO of Europe Pacific Capital, who joins us from Western Connecticut. Peter, welcome to the program. So we've had a broader pullback in the markets overnight with the selling in the healthcare sector. But wow, I mean, these Apple numbers, it doesn't seem to be anything that can stop the Cupertino giant. I mean, for the investors out there that haven't got exposure to the stock, is there ever going to be a time for a meaningful pullback in this particular play to get in?
Well, I'm sure there will be. It's just timing it is always difficult. But, you know, the NASDAQ is basically single-handedly powering the entire, Apple is powering the entire NASDAQ. I mean, all the earnings growth are coming from Apple. But, of course, it's going to be hard over time for Apple to maintain that type of growth and those margins because you've got so many people around the world, so many companies competing for a share of that market. But the bigger problem for the U.S. market is the softening economic data that came out today and now the weakening U.S. dollar, which I think is about to get a lot weaker as people get their arms around the real predicament that the U.S. economy is in.
So, Peter, what does this mean for the Fed as they're meeting for their two-day meeting on Tuesday? What kind of message are you expecting out of the Fed?
Well, look, they're still going to pretend that there's a rate hike somewhere at the end of this rainbow, but that's not going to happen. I mean, maybe they will acknowledge a softening of the economy, which will be a gross understatement. Look at the horrible data that came out today. And this was April data, so you can't just excuse this and blame it on the weather. But what people have to understand is because of the Fed and their prior policy mistakes of keeping interest rates at zero, of all this quantitative easing, they have screwed up this economy so badly that if the Fed were to raise interest rates at any point, they would precipitate a worse financial crisis than the one they caused in 2008. And so we're not going to get a rate hike no matter what they say. We're going to get QE4, and the next crisis is going to be a dollar crisis.
But Peter, I mean, the difference between us not getting the rate hike, June or September or even in 2015 and QE4, I mean, there's a wide gulf of difference there.
Yes, but eventually the market's going to have to wake up to this reality. All this rate hike talk is just talk. The reason they've been talking about it for years is because they can't do it. Because we're so levered up now because of the Fed, the economy is so screwed up that we need 0% interest rates. But I don't think 0% is low enough. I think without another dose of QE, the bubble is going to pop and we'll be back in recession. And so to prevent that from happening and to postpone the day of reckoning, we will get QE4.
But why exactly would QE4 happen? Because, we can't go through this cycle for another 6 years or so. And Adam and I have talked about how the U.S. economy and the markets have rallied on 3 to 4% interest rates in the past. Why can't it be like that again?
Because this is not the past. We have so much more debt now than we had in the past. And, you know, it's like if you're a drug addict and you get used to a certain amount of drugs, you can't get by with a smaller dose. You're going to go through withdrawal. We've had 6 years of 0%. That's never happened before. We can't raise interest rates now when we have that kind of habit. And if you look at the enormity of the debt on the federal balance sheet, on corporate balance sheets, look at, the real estate prices, the banking sector, all those banks that were too big to fail in 2008 are much bigger now than they ever were, and they're very susceptible to even a slight increase in interest rates, which is why the Fed won't raise them. But you're right, it's not going to go on for another 6 years. We're going to have a major economic crisis centered around the U.S. dollar long before that 6-year time period can expire.
Well, Peter, I hope that certainly doesn't happen. We've already been through a few of those ones, but economic cycles do happen, and certainly the stock market ones every 10 years, right? Peter, we're going to leave it there. Thanks for your rather evocative statements on the program today. That was Peter Schiff from Europe Pacific Capital coming to us from Connecticut.